Hey everyone, Nick Shaheen here looking at gold. I do videos. I don't remember when I did gold last. I can look into history. Hopefully I won't contradict myself here. But okay, so this is more so trading than actually investing, but the investing in gold should be a no-brainer. I say should be because it never is. So the idea behind investing into anything, it's perceived value, right? So the only reason gold has value is because people believe it does. Period. End of story. Kind of like cash. Cash that is not secured with something else. So in this case, people love it, and it's hard to get. Apparently, it's getting harder to get. So in theory, the price should only go up. Same concept as behind Bitcoin. Don't hate me. I'm not going to talk about Bitcoin right here. Maybe I will a little bit. But anyway, so people love it, and it's hard to get. So why isn't it always going up? That's why we trade, not just invest. So if I'm looking to make an investment for 30, 40 years, I should just buy it and hold it. Because in theory, people are going to continue to love it, and it's going to get more expensive. And so buy it, stash it somewhere, bury it in the backyard, and you'll have more money at the end. So this is a 1 year, I believe 1 year. It's a daily chart, and it's 1 year worth of data. Every candle is 1 day. So if there wasn't trading, then this should be just a straight line up. And it's not, because people trade it. And these days it's more machines than actual people, but there we go. So is it a good time to buy gold right now? The answer is maybe. It depends, but it's definitely tradable. I say it depends because about the time frame. If I'm in it for the long haul, why am I trying to pick bottoms or low spots? Just buy it for the long haul. Not a recommendation. It just depends on the person. And this is the GLD. This is an ETF. It's not like buying gold. It's the wizard behind the wall makes this ETF track the price of gold. There's also the gold futures, which look exactly the same. This is a GCF. So if you want to invest in gold itself, you just buy an ounce of gold or however much you want, and you stash it. That's how I would invest in gold versus trying to trade gold via the ETF. So if the electronic world ends and the zombie apocalypse comes and gold still has value, this might not, because it's an ETF on a computer versus the actual gold, which is actual something you can hold in your hand. So back to the chart. Is this a good time to buy gold or invest long or short? So I'll give you my opinion of the levels that I'm looking at, and I'll tell you that today I was looking to short it based on a few things. A short-term trade, but I didn't find any premium that was exciting, so I just walked away from it because I was short bonds, which kind of trade hand in hand. So I say that because gold is at times a safety trade. When people are fearing the market on a big headline, they jump into a few things. Bonds is one. You hear, should I invest in bonds or stocks? Because they're perceived lower risk bonds if the government defaults, which is less likely than a company defaults. So that's why bonds are, U.S. bonds, for example, are perceived safer. So it's either or, stocks or bonds. So if people dump stocks in mass, they need to put the cash somewhere. If they don't have their boss's permission to do anything else, well, they just buy bonds. Same with gold, same with yen, carry trade, whatever. So gold is also a safety trade. So when the stock market falters, you see a spike in gold. So I'm short bonds. I don't want to be short gold and then have one bad, tweet from the president and then both of them rally and I'm screwed on both ends. So I didn't want to do that. So I stepped away from it. But it looked shortable, but on a shorter term basis. So back to the thing at hand here. So I'm going to mark it up and share the levels that mean something to me. So this guy will give us a scratch pad that we can mark up. All right, so back in June, July, there was a roof. The bulls had tremendous momentum. I mean, gold rallied and then rallied crazy. So they had tremendous momentum and then they broke out. I tried to short it and then I got stopped out. But then when it got to here, I shorted this, and I almost got stopped out here, but I stood my ground. I shorted it and bonds. Strictly based on rhetoric, everybody loved gold up here. everybody. If you listen to any news, CNBC, all of them, I've read any article on Yahoo, they're all gold going to the moon, bonds are going to the moon, everything's going to the moon. So I said, you know what, where's the incremental buyer going to come from? And I said, the door to exit these positions is going to be tight. So I shorted it with conviction, and they played out, all of them. So these levels matter, and those two in particular. So here was a wall until it wasn't. Once they broke out, this was higher lows knocking on a roof, and they broke through the roof, they overshoot higher, right? So this is why you get these they call them ABC moves. So you get an A move, some sort of a consolidation this way, and then once it resolved itself upwards, they finish the second leg of this one, and they look like this. And that happens on the way down too. So is this one on the way down or what? That aside, I'll put levels into play, right? So I don't want to... I'll extend, see that orange line, I already extended it. I have an alert for me. I really would short it if they break through this, because now there's a level loss and a pattern loss. So right here, there's almost nothing to do until this tight range breaks. This is on a daily chart. There are plenty of things to do on an intraday if somebody's trading the futures. But to my eye, this is a level that is important. This right here, this candle, is pretty big ledge. I'll zoom in on it later. So once they get back to it, people that were stuck up here might want out. But if they come back to here and they come to here, then they're going to shoot down to the next level, which is somewhere around here. But look, there's an open gap down here. So maybe they go all the way down to 128. You're calling me crazy. Maybe I am, but this is what the chart is saying. So in addition, those technicians out there that are watching this, this will be some sort of a if it does this, if it does this. I didn't call it. If they do this, this is how it usually unfolds. But once it triggers here, momentum sellers will jump in, and they tell you it's going to be, the dip is going to be as big as the cup. This is an inverted cup and handle. So it looks like an upside down teacup of sorts. You know, this is the handle, this is the cup. And they tell you it should be as big as the stomach of the cup. So eyeball somewhere on here, which matches up with this level of support here. So there will be support around where I drew it by instinct here, 132 something. But I wouldn't be surprised if it continues on lower to fill the gap. Not every gap fills, but this one could. Another thing to pay attention to is this orange line right here. So this is about a year's worth of data, right? And these down here are volume. These little hash marks are volume. So they tell me that these days there was a lot of volume. So the rally was size. This was a sizable rally. But this information here, this is volume too, these bars. And they're more telling than this one, because this tells me when they happened. This tells me where they happened on price. As far as as far as price, at what level did these occur? So this tells me a few things. It tells me that there's a lot of interest here, which means this is actual fighting that happened. That's why we have that consolidation period here, that B leg. So it tells me that there's going to be support. Like I drew this by instinct here, but now I'm looking left and like my instinct was correct. There should be support here. I'll call it support level 1 if this breakdown happens. So, but I would not be surprised to see it fail after a few bumps and then coming down to level 2. But this is where most of the action actually happened. This tells me that this was the point, they call it the point of control in this volume profile. See how it is like two pointy things? So it's choppy. So not a lot happened here. So the market has not had a chance to negotiate this. They went from negotiating here for a long time and then up to here and then a long time and then up to here. They didn't spend much time and they're coming back. So at the first sign of trouble here, they're going to come back and say, let's fill this, let's color this in, so to speak. Okay, because this is not normal to have these two peaks. So this is from a volume profile perspective. I'm not forecasting a drop, but I would not be surprised to see it. So when do I start shorting? Now? No. I would start shorting when I see the trigger. Depends on my timeline. If I'm a guy that trades or a person that trades off the daily charts, then I should wait for a breakdown of 136 before I short it. But I would also chase it. I'm not against gold. If I see a break above 140 with force, I would go after it because they're probably going to fill that gap. Okay, so now you get the concept. So I'm going to take that out. Back to a clean chart. So let me put my, actually I have it marked up from before. Perfect. Okay, so I drew this green zone because it's important. And that is where the first point of control is, and that's where the second point of control is. And I don't know where that white zone is coming from. So this is daily, yeah. So we'll go to a weekly and see where that came from. So this was important to me at some point. I'm not going to bring it in. All right, so let's drill down into smaller increments. 2-hour charts. All right, so now we get for the active, more active trader. So this is a 2-hour chart on gold. Same chart, only 2 hours. Every candle is just 2 hours. I said, if this breakout, this should come. But now I'm going to say, I'm going to put a trigger here. I don't want to get faked out. I want to see a breakout of this, so let's see if I want to chase it. There's a little gap here, a little gap here. And that's my trigger to short it on the downside. So up here, I guessed with this ABC, my guess was it was going to here, and it came pretty darn close. So I missed it on time, but I nailed it on level. Okay, so I drew this way before this actually happened. That was part of my short thesis. So the cluster tells me that something's going to happen. But this gate has to break, or this gate has to break. So could I go drill down even further? Sure, I'll come down to 5 minutes, but pretty messy because I ruined the chart. Hold on, let me go back into it. There's no reset button on this. Okay, so this is a 5-minute chart for all of ye active traders. What is this? Okay, it's not a coincidence. I mean, I'm okay with the level, but that happened today. Oh, yeah. Okay, so middle of the day, see, safety trade, perfect. I just remembered. There was a bunk headline that the negotiations, there are hiccups in the negotiations over the amount that they're going to buy, that China will commit to buying from agriculture in the U.S. Like, are you kidding me? I think that Dow Jones rehashed this headline, and people sold the market for like a fraction of a second, and then fear spiked, including gold. I told you it's a safety trade for like a second. This is what, 5 minutes? 5 minutes. The market spiked. 1 minute. 2 minutes, they forgot about it. Okay, so, and look where they spiked. They filled this gap, actually. I'm glad I did this. So now there's no need to go up there. They already did it. And they came to this one, and look left. Ooh-wee. Okay, I'm here, look left. What is that? That's a ledge. That's a ledge from which they fell. So they were spending time here, and then they fell. They came back to it. It all makes sense. It's all in the charts. So now 5-minute increments, I want to see a breakout of 139.10 to at least have a chance. Otherwise, the bots will sell the pops. Every time it gets to 139.10, it's going to get sold, or a breakdown below 138.90. So that's the really granular trade on there. But most people don't trade that fast. So maybe zoom out to 15 minutes. A little less crazy, right? So you can see maybe this 139.50 versus 138.50 or 60. So now it's a little easier to chew on. 30-minute charts, kind of the same story. You get the point. 60-minute chart. So one day will give me the years. So basically, I don't trade anything, regardless of my thesis. If I believe gold is going to $1 billion, but I want to trade it for the short term, these are the same lines I just discussed with you. So to answer the question, is this a good time to buy gold? The answer has to have, first thing, what's your goal? Is it long term, really long term? Then sure. If it's not, are you trying to hedge stock portfolio? Sure. Am I trying to trade it? Then I should drill down deeper and find the levels that would trigger me long or short. And I should be open. Recently I traded Tesla, short and long. First, I shorted headlines that were stupid. And then when it fell, I thought, okay, so now it has support based on the chart, so I went long and ranged it. Sure enough, both sides won. So the charts have a lot of information, and the answers to any questions. Like if I love Intel, I'm picking the stock out of the blue, and I think it's going long, higher long term. This is not a place for me that I would start buying Intel because it's precariously perched. This sure looks like in fact, I shorted it today with small money out to January with a put calendar, if you know what that is. But anyway, not a high conviction because I should wait for that line to break. Once that line breaks, I think 52 will come fast, 52.20. But the point is, if I'm looking to trade a stock, I should listen to the clues and not go by emotions. Emotionally, I want to short it like big time right now, but I shouldn't. I should wait for this line to break. Today I broke my rule because I have other longs. I figured I'd balance my longs a little bit. And I figured, okay, this is an easy short with small money, and it's for an earnings play later down in January. So I'm short in January, but long in December, so it kind of balances it out a little bit. And I can change my mind tomorrow. But this is tight. A move is coming in Intel. You know, lower highs, banging on this. Look, this is like somebody drew a line and said, don't cross this line, please. And if you do, let me know. So we went from talking gold to talking Intel. But anyway, the charts have a lot of information and they can answer a lot of questions. You just have to pick the right time frame and listen to the volume because it speaks volume. Nick signing out. Oh, below there's a link to chat room. It's a free pass. Also subscribe to YouTube channel.